All right, everyone. Welcome back to the channel, okay? Today I got a topic at hand that I think a lot of traders probably struggle with. New traders, probably even experienced traders, but more so people who are really starting out trading. If you're someone that's probably already trading and very profitable, this probably want to apply to you because you've already conquered it. But let's talk about when your strategy does not work. What are you supposed to do? You see that trade set up right before your eyes. You take that entry, everything kind of works out. It seems to appear that it's a great trade setup to get into. You execute your strategy, and boom, the market blows you up or comes back against you, right? What are you supposed to do? So, watch the intro, and we're going to jump right into that video. Okay, look, let's go ahead and clear the air. Clear the airwaves, okay? If you think that a strategy that you have, one that you think is a great strategy, is going to work every single time, 100% of the time, do not fool yourself, okay? It is not going to. You will take probably losing trades. You will take, when I say losing trades, it really all depends on, how great or small of a trade, but you will have trades that will not just work out, okay? Regardless if you get the right setup. You know why? And people ask this question all the time. It's because we as retail traders, do you think we push the market? Do you think we drive the market? No, we do not at all, okay? Banks, the institutions, we simply don't have the mere capital to be able to drive the market in any particular direction. Regardless if, I don't care if you get 100 friends and you put your money on the table and you're pretty successful and maybe even possibly rich, whatever the case is, you may be, maybe move the market just slightly for a period of time, whatever the case is. But, overall, the big direction, the way the market moves, heavily to the upside or downside, guys, it's the banks and institutions. We as retail traders will not push the market, okay? We as retail traders have to learn to do what? To ride the magic carpet with the banks and institutions. We have to look to see in the market where they are showing their hand at, putting their cards on the table and play along with them. Never try to fight the opposing force, okay? All right, don't in this game here, do not do that, okay? Strategically have a plan, a strategy that you can play with those big boys, okay? That you can play the same game with them, all right? At the end of the day, this business is all about making money, and we have to have a strategic strategy or plan to put in place to be able to trade and make money with them, all right? So the charts are no more than just basically a footprint of what's unfolding and what's being left behind for us to be able to visually see so that we can go back and wait patiently as the market retraces back to certain areas. Yes, I'm a pullback trader, trading supply and demand. If you do not trade supply and demand, that's fine. Doesn't matter what what particular strategy or system you trade or however you trade, whatever the case is. Look, at the end of the day, we must understand that we have to be able to see what's going on in the market and the charts there to do that. All right. Now, getting down to what I was going to talk about, not every trade is going to work out regardless of your strategy, okay? Let's say you got a 90% win rate strategy or 95%, or whatever the case is. Nothing is 100% in this business. Understand that. People ask me all the time, well, I don't ever see you, take a losing trade. Look, if you go back in my videos, in plenty of videos, you'll see where I have taken bad trades, where I have taken on heat, 3-4 point pullback sometimes. But the thing about it is being at the end of the day, it's all about managing your trade, risk management. Understand that. Lots of people blow their accounts because they do not know where to exit a trade at, okay? I always say this. Before you enter your trade, you should do what? You should know where you should be taking profit at, okay? Regardless if you're scalping or intraday position trading or whatever the case is. Or the fact is, you also need to know where to exit that trade in the event that it comes back against you. Now, I'm not one to play around and allow the market to sit here and kind of teeter-totter back and forth, hee-haw, seesaw around, whatever the case is. If it is doing that, I quickly get out of a trade. That's what helps me or prevents me from taking any kind of major loss. If the market is not moving and is not followed by enough momentum, then I am quickly getting out the market. Okay? Then I will sit back and let it show its hand. If it shows its hand correctly or appropriately for me, then I will get back into that trade. All right? Now, another strategy that I use in the sense of, getting out of the market quick enough is also this. I know when the moment I get into a trade or before I get into a trade where I need to get out if it crosses my thresh. Yes, if you guys watch some of my videos, I take on some heat sometimes, maybe 3 or 4 points, whatever the case is. And people say, well, why didn't you got the trade? You have to know whatever, however you trade. Like me, I'm a supply and demand style trader. I don't trade all purely support and resistance, meaning straight pullbacks to a certain area of support or resistance. I'm looking for where the move originated at. I'm looking for where on my charts where I see the big boys getting into the market, either to the downside or upside, or whatever the case is. So when I mark that as my zone, as long as the market doesn't break that thresh, meaning that area above supply or that area below demand, I'm going to stay in the market, okay? That's typically my stopping point for me to where I'm going to get out the market the moment that price crosses above an area of supply or demand that I have marked in my chart. Look, that's the thing about it. We have to strategically and logically mark areas on our chart based on price action, based on price movement, what we see and where money is resting in the market. I always talk about liquidity. You have to understand that when the market moves, is swinging to the upside or downside, whatever the case is, breaks structure back to the downside and breaks it back up, whatever the case is, you have to understand key areas in the market where money is resting, all right? Okay, and that is their goal. The banks and the institutions, the market makers, it's their goal to attack those areas in the market. At some point, they're going to hit those areas because money rests there. Okay, so it's our goal to move with them to those areas. Okay, so that we can be part of the game that they're trying to play. When they create liquidity in the market, guess what? They're going to come back down there and capture that money or capture the area where money's resting in the market. All right. So they create moves in the market, okay? They create moves in the market to where traders put on positions. Say, for instance, they want to push the market up, right? They want to push the market up, okay? The market is moving higher and making higher highs and higher lows. It breaks, it folds back, breaks structure to the downside. So now we got a new low, okay? What do you think is going to happen there? When we got a new low, buyers are going to step into the market. Okay, and that can be a lot of retail traders step into the market to push the market, to think they want the market to go up, right? So the banks and institutions will allow the market to go up. They'll play the game with them, okay? All right? So when that's creating an area of liquidity when there's a new low that's created. So when the market pushes higher, all right, the banks and institutions are looking down and below and they see that feast. They see that dinner sitting right below them at that low. And they're going to turn the market back around to capture that money, and then they're going to move the market in your intended direction. So if you're a buyer at a low, okay, and then the market pushes up to the upside, all right, they're going to, and you think the market's going to keep running to the upside, they will turn the market back around just to stop you out, take your money, and then turn the market back around and go in your intended direction. So you have to understand the game and trade with them, all right? So that's pretty much what I wanted to talk about primarily in this video is about. Don't ever think that your strategy, when you see a trade setup, is going to work every single time. You get to the point to where you see that favorite trade setup, right? All right. You tackle it with your strategy, you execute it with your strategy, and it doesn't work out for you. Don't beat yourself up. Just know where to get out of the market. All right. You have to have a clear or defining area to get out at, to truly get out the market. All right. If not, then the market is going to cause you to have some major drawdown, some major loss, and it could possibly cause you to blow your account all in one day or 1 week, So protect your capital. That's the end all goal in this business is to protect our own money, all right? We play the game, okay? The business of trading, okay? But we have to protect our capital as well so that we can survive another day to stay in the game and to make money, all right? So for me, like I said, typically speaking, when I'm in a trade, I've marked an area of supply or zone, supply or demand. If the market comes back against me once I'm into a trade, As long as it doesn't break above supply, or as long as it doesn't break below demand, then I'm going to stay in my trade, okay? But if the market does not move quick enough for me, it's kind of move. I'm in a trade and it's just moving sideways. I am going to get out of my trade if there's not enough volume carried by, which is carrying with momentum to the upside or downside. I'm getting out, okay? All right, because if there's not enough volume behind once I'm into a trade, whatever the case is, then 9 times out of 10, that the market can fold and come back against me. All right, because there's nothing there to push the market. All right. Now, just to show you an example, okay. Here's a trade that I took today. Yes, this is today's trade. All right. Live entry that I posted out on Discord. Okay. Now, I want to talk about this trade because I want to also talk about my setup, what I'm looking for when it comes to supply and demand, and where I'm going to get out the trade. I need to manage my risk, right, appropriately. I need to manage to make sure, that I don't allow the market to come back against me, once I'm to a trade. All right, so take a look at this, okay? This is a trade that I took out. Again, I put this on Discord. What you have going on here, understand this. Okay, so what we have is a low right here, all right? Followed up, price turns around and starts doing what? Starts breaking, structure to the upside, right? Okay, excuse me. And then it pulls back, right? It breaks structure right here, okay? It takes out this area of, this low right here, this area of support right here at the bottom, okay? On this move to the downside. I drew these arrows here for a reason so you can see the movement. A low, break structure, pulls back, pushes higher, turns back around, breaks structure, turns back around, takes out structure right here, breaks through this high right here. So when price pulled back right here and took out the support, this area of support right here, what do you think happened right here? There was liquidity that rested right here. Okay, so at this high right here, do you not think that they're not going to want to turn back around and capture that money in the market? Yes. Okay, sellers stepped in here, an area of liquidity, leaving behind an area of liquidity right here. Okay, when the market came down and broke structure right here, so they're going, when the market comes back around, it's going to take out that area right there and capture that money. Okay. Pushes higher, okay, breaks structure, pulls back, okay. So when the market broke structure right here, back to the upside right here, up when it broke structure, on this push up right here, what do you think rests back down in these areas right here? Demand, okay. So you can look to take a trade when price gets back down to this area right here. When you get the rejection, take it back up to here. When the market pulled back right here, this was at 8 something this morning. I think we had maybe some type of news or something, because you see this major flush to the downside right here. I'm not 100% sure. But anyways, you got this aggressive selling to the downside right here, right? Taps into an area of demand. And then but you got to look at here. Above here, we got supply. Why do we have supply? Because when price broke structure here to the upside, broke this area here where liquidity was resting at, turns back around, takes out structure, right here, back within the swing right here, takes out this low right here, but there's demand resting right here. So if you got into the trade when price got back down here into demand, you take it back up to the area of supply, okay? But then the market continues running to the upside. Now, what is it doing? It's taking out structure again. It broke structure here on the downside, re-breaking structure or taking out structure back to the upside. What was right here? What was right here? Liquidity again, okay? The market runs back to the upside, takes out liquidity. Then what happens here? This is where I got into my trade at, okay, on the way back down. The market folds, pushes lower, breaks back within the swing, taking out structure to the downside, okay? All right? Aggressive selling right here, right? Okay? Moves down, pulls back, breaks lower, taking out structure, okay? Aggressive selling, supply resting right here, okay? The supply resting right here. So, what did I do? I mark this zone right here. I wait for price to come back to it. Once it gets back to it, what am I going to do? When I get the rejection, I'm going short. It came up here, moving sideways, got the break below. I went short, okay? I went short. I should have placed my targets down here, knowing that the fact that price is probably going to run back down here and take out this low. But I think I got like 2 1/4, 2.5 on the first contract, and then three points on the second contract. Still a good, decent trade. I took another trade before that, but I wanted to discuss that trade right there simply for the fact you have to be able to look for certain things. Now, let's talk about if I got into that trade, how am I going to manage that trade, okay? Meaning, right here, I'm into the trade here, right? But I'm not going to get into the trade the moment it just taps immediately right back into this area of supply here. I'm going to wait for the rejection and get the break of the candle to the downside, then take my shot going short, right? All right, so, but if I'm in the trade, let's talk about this, okay? This my favorite trade setup right here, okay? I'm using my strategy at this point, okay? My strategy is waiting for price to tap back into an area of supply, okay? All right? And once it gets back into an area of supply, I'm looking for the break of a candle. That's part of my strategy. Tap into an area of supply with this aggressive selling that took out a structure, okay? Broke down, took out structure, aggressive selling, pull back the supply, look for the break of the candle. It's just like 3 or 4 steps right there, guys. 3 or 4 steps that you're actually looking for, okay? If the market fails to go lower and then it starts to push higher. Now, there's 2 places that I talk about if you really want to be more conservative and manage your risk appropriately or correctly. Look, wherever you enter your trade at, let's say you enter your trade right here at, let's see, taps into the zone right here. We're looking for the first break of the candle though. Let's say you got in your trade right here, okay, at 21 and 3/4 or 21 and a half. Put your stop back here at the back end right here. There's 2 places, right back here at the highs right here, at the top of this little move to the upside where price will trace back or pull back to the zone. Right here on the back end, the break of the candle on the back end where you put your stop at. I typically say don't put it tick to tick. If you're very conservative, that's fine. Give it a little bit of breathing room. But for me, is what I'm going to do is I'm going to put my trade on the back end of supply, okay? The back end where supply rests at, the top end right here at 31. Yes. Some you guys have seen me take trades in the market. I get into a trade, I'm going short, say for example here, the market breaks higher. Yes, it starts to play with me mentally a little bit because I'm thinking like, okay, what's the market going to do? Is it trying to break higher? I'm back 2.5, 3 points, you know, but as long as it doesn't break my area through my area of supply, I am still confident that I'm still probably going to get continue getting that move I'm looking for to the downside. The move was really to take this low out right here, and I should have stayed in the trade. But, I take what I'm going to get, and I look for the next setup, all right? That's just sometimes, sometimes I will take it all the way down to this low right here and look for the break. But, depending on how the market is moving, how price action is, the movement of the market, I may get out a little bit earlier, whatever the case is. But I want to talk about how to protect your not only your capital, but to protect your trade, and the moment that you're into a trade, knowing where to confidently get out at. To me, there's 2 ways to do it. The back end, once you get the break of the candle at the high here, right here on the back end of that candle right here, or at the back end of supply or the back end of demand. This is supply, so I'm gonna put it on the top here, wherever demand was at. If I'm taking a trade off an area of demand, say for instance, this was demand resting down here at the bottom. I got in, I'm just using this hypothetically, guys. The break of this candle right here, I'm going to put my area of my stop right here, the back end right here, okay? Okay, right here. So if this was an area of demand down here at the bottom, I get the break of the candle, I'm going to put my stop on the back end right here. Now you want to be conservative, you could also, like I said, put it wherever you get into the actual trade at. I'm sorry, not break of candle. The demand area would be, let's just mark this right quick. Let's say the area of demand was, I'm just, like I said, hypothetically, like right here, okay? All right, pulls back, and this probably was demand. Pulls back right here, okay? Right here, it pulls back to this area of demand. I'm going to put my stop below here, the area of demand. Now, you can be very conservative on the pullback, and then once you get the break of the candle right here above 15 and a quarter, once you get that break with that green candle breaking above that red candle right there, put it on the back end. The back end, the lowest portion or the lowest spot where price will trace or pull back to, okay? The back end here, you can put it tick to tick. I say give it a few ticks breathing room just to be safe, because sometimes they will come down there like you see right here. They push the market up and then they allow the market to come back. It wouldn't stop you out here, but sometimes they will bring it tick to tick back down to this area here and stop you out, okay? And then it's like, then they'll turn the market back around and push the market back in your direction. And then it's like, oh man, all right, I lost money because I got in right here. But, that's the thing about having a stop. You got to know that sometimes you are going to take a small loss, a few ticks, whatever the case is, and just chop it up and move on to the next trade. But the thing about it is, do not allow the market to start breaking below certain areas and continue to breaking below to where you get a major drawdown on your account. To me, I'm getting out right here. Once it breaks below demand, if you're comfortable getting out right here, on the retracement after the break of the candle, and you put it on the back end right here, then you're protecting your trade a little bit more. You're protecting your capital because you're not going to take on as much loss if the market comes back and stops you out. Okay, and then you're solid for the next trade. But that's two ways I do it to protect my capital for risk management, from a risk management standpoint. Getting out of the trade when I know where I need to get out of the trade at, and if the market's not moving quick enough in my direction, then I'm getting out of the market. Okay, all right. So that's just simply how I do it. So on those favorite trade setups that you're actually looking for, and it just doesn't work out. Sometimes you have to really go back and kind of revisit those trades to see if you follow through with your strategy correctly, for one, and making sure that it was a high probable zone or area to trade from. Again, we're talking about supply and demand, so I'm not support and resistance style trader. Some people want to say that support and resistance is the same as supply and demand. No, it is not. Okay, I don't care what you say. Anyways, but yeah, if as long as you do that, okay, look for high probability setups, okay, and again, trading, there's nothing that's 100%. But the thing about it is, if you trade off a high probability zone, okay, all right, and it's a nice setup, okay, and you tackle that trade setup with your strategy, then 95% of the time you're golden, okay. And that's the thing about it. If you're 90% effective, and let's say you take 10% losses, you're going to be fine. You're going to make money. You're going to be extremely profitable. Just manage the losses, okay? Those 10% losses or 5% losses, whatever the case is, be able to manage them and know where to get out. And that's really all I have for you guys. I just wanted to show you in an example of a trade I took today. In the event the market came back against me, where was I going to get out at? How do I manage, my capital? How do I manage the trade? And knowing where to get out at, as well as showing you a clear defined setup. And what I look for when it comes to supply and demand, okay? So, but other than that, I mean, you have to learn to really conquer that psychological piece of fear. Yes, I even chicken out and get out of trades, and even with me being profitable the way I am, and been doing this for 10 plus years now. Yeah, some trades I get into, I'm not gonna say it's a whole fear factor, but when the market comes back against you, anybody and everybody is gonna be like, oh, okay, what do I do? But you got to allow yourself, to follow your trading plan, and if it doesn't work out, it doesn't work out. You just, you minimize your loss, and which is part of risk management, and look for another trade setup. That's it. That is clearly it, guys. Okay, I'm sitting here looking at the charts. My camera's over here, but I'm looking at charts trying to explain things to you. So please forgive me. But anyways, I'm going to jump off here. I thank everyone who has been, following the channel, who subscribed. If you are currently not a subscriber to the channel, I would highly recommend you do so. Lots of great information here on the channel that I give away for free. We have a great Discord community with 800 plus members now, which I will show you that right now. I'm gonna go ahead and move it over here. I have it on another screen. And just to show you an example, that was that trade setup right here that I took. It was right here, okay? Just to show you that. But yeah, this is our Discord community. We have two channels on it, the general chat and then the trading floor. The general chat is for, anyone and everyone who has questions about the future markets and wants to discuss with other fellow traders about the future markets. We are future traders here in the channel. So come over, click on the general chat, ask away. Someone will have an answer. The trading floor is when the session is actually open, and we as traders come together and we share our trade entries. We talk about our, levels and zones of interest. But again, basically what I'm trying to say is we share those levels, we share those zones from which we're taking trades from. So, and we post screenshots of the actual trade of our trade entries just to confirm, what we say is what we're doing. So if you're going to come over and you're going to trade with us, or you're going to share information on the trading floor, please make sure to capture a screenshot of the actual trade, the zone, the level, whatever it is you're trading from, so that other fellow traders can see it as well. Other than that, that's all I have for you guys in this video here. If you're interested in becoming one of the tier members, to where you receive like perks and rewards, meaning if you click on the join button on the homepage here on YouTube, or the join button on any video on the channel, you'll see that where there's two tiers, and each one of the tiers has particular or specific perks and rewards. Now, most everyone who signed up has signed up for the elite member, or become an elite member supporter. And the reason why is because they want to receive the trade breakdowns. The trade breakdowns is where I go into detail, cover my trade entries when I post those videos to the channel. So it's as if you're sitting next to me. I'm walking you through kind of the mindset of what I'm thinking leading up to a trade and why I took that trade, okay? As well as you get the playlist of videos, which I've hand selected or hand picked from over 400 videos here on the channel that I feel are very beneficial to traders, packed with great information surrounding the strategy, and as well as information that I think that traders, kind of help traders out, especially people who are new traders or new beginner traders out in, kind of helping them kind of carve out their own edge or niche in the market or whatever the case is. But definitely I go over in detail about the strategy and actually how it works. And but basically for the price of a cup of coffee, we're talking about $6.99 a month. Just a way for you to give back and help a content creator such as myself, because I'm giving away this information free hand by making all these videos. I don't have a trading course. I don't have a program or a training program, and I'm not a mentor. So I'm not a teacher or an educator in any kind of way. I'm just sharing what I've, the experience that I've come across and things that have helped me out in the 10 plus years of becoming a profitable trader, as well as, I talk about in many videos, my stories leading up to me becoming profitable, the struggles that, like most of you guys are dealing with who are new or new traders. I've been there, so anyways, I just want to leave you guys with that bit of information. So it's up to you if you want to choose to, sign up for the elite membership side and receive those additional perks or not. But outside of that, I appreciate everyone who's tuned in. If you, like I said, if it's your first time watching one of the videos, please take the time to subscribe to the channel by simply clicking on the red button down below. As well, click on the bell. Make sure you turn your post notifications on so that you never miss one of the uploads here on the channel. And I'll see you guys in the next video. Please be safe in the market. Make sure to stay green, because that's the goal here, is to be green and not in the red. I'm not saying you won't have a losing trade, but know how to manage your trade and practice proper risk management. Okay, guys? All right, see you in the next one. Take care.